Welcome to my channel again. Today we're going to have an episode about stocks, basically the end of day bets. Normally we have episodes about stocks, clarinet saxophones, finances, investments, and other subjects to ramble about. As I mentioned, today's episode is about the stocks and the end of day bets. What I try to do in this channel is to help you see what critical things to look at and learn more about all the things about you need to learn to buy and sell stocks. So what is the end of day bets and what am I talking about? Well, end of day bets is when there are large buy or sell orders at the end of the day on a stock. These could be buys when they think they'll be buying a large move up the next morning, or could be selling for a large move down the next day, basically cashing out for that day. For instance, if a stock goes up in one day by $10, it may probably go down the next day. So you'll see these large sells at the end of the day after a large movement up in position in order to cash out for that day. Because the next day the stock would drop and then they'll buy back into the market and follow it back up. End of day bets for beginners basically is end of day sells. You're selling from previous fast buy. Stock is rising a large amount during the day, thus expecting a next day drop and thinking stock would dump the next day, which is common on a volatile high dollar stock. End of day buys is looking for good news to push a stock up higher, or stock dumping during the day and expecting it to pop the next day. So at the end of the day, you'll see a tail down as the stock drops. Usually this ends up being with a quick return in volatile high dollar stocks. Price can jump $3 to $5 at the opening very easily, a really fast return. Of course, there's a lot of things you got to take into account, and you're basically betting of how the stock is going to jump the next day or drop the next day. Here's an example of an end of day buy. As you can see here at 4 p.m., there's a 634,000 share purchase at 4 p.m. to buy. The next day, there's a $6 jump, which is a $3.8 million immediate gain from that last buy there. Of course, you can see the stock keeps moving up and trending up. This example is Square. I'll be using examples of Square in this episode. Down here, we can see the one jump we just mentioned and how the stock has been moving throughout the last couple of days. We had another jump a couple of days beforehand, some volatility the day before, then a big jump that particular day. Another example is 4 p.m., 153,000 buy at 4 p.m. The next day, there's a 4 p.m. price jump at market open, which was $6 million just in that particular move. This is important. You may not be buying 400,000 or 150,000 shares. Just buying 10 shares and getting a $4 price jump is $40. Not too much, but you do that over time, you can actually build up quite a little sum of money there. Keep in mind, try to put aside 30% for taxes at the end of the year. Here's a wrong way where at 4 p.m. there is a sell of 248,000 shares and there's a market pop the next day of $1. Of course, at some point they'll probably buy back in and follow the trend moving up and down. So what to look for and how to learn about this. A volatile stock that has ever increasing stock price is one you want to look for, where they have great fundamentals, great revenue per employee, which I'll review in a future episode, profitability or moving that way, quarterly and year-over-year improvements, and high market expectations. Of course, having large swings is good for the stock because that gives you ability of buying in low and selling high, hopefully. You want to watch for days when the stock dumps. If you think there's this emotional play over market dumps due to some emotional swing, then one can expect a big jump the next day. Or conversely, one can expect a dump the next day. Pay attention to stock news. When is quarterly data being released? Pay attention to the overall market, rising with good futures. Also pay attention to the market segment. Is that rising also with good futures? Pick a stock or two and watch for end of day bets. Watch the volume at the end of the day. Watch the stock price at the opening of the next day and how it trends throughout the day leading up to the end of day. Also compare it to the market segment and also market overall and start learning how the stock moves. As I mentioned, I'm using Square stock as an example here. For transparency, I own Square since about $15 a share. I sold out of my Facebook around $200 to pump that into Square stock, and I'm long on Square. Square is a large institutional ownership currently at over 77%, and has been this way since the early days. This reduces the amount of stock for general day-to-day trading. Market capitalization is around 106 billion right now, over 450 million shares outstanding. Current comments and targets have for about $300 a share. Of course, those same people thought the stock was going to dump a year earlier. Some have shorted it to $30 a share up until last year. I guess they lost on that one. And it kind of reminds me of GameStop. Well, anyways, I want to thank you for listening to my ramblings. Questions or comments, put them down below. You gotta love the knowledge, gotta love life, and you gotta love the stock market. See you next time.